I'm Frank. It's time for the Frank Roach Show. I have a really nice day ahead, starting with a great lunch. It's a Friday, summer weekend in the Northeast. Time for the beaches, the Hamptons, Newport, Cape Cod, golf. Not so bad. A little dreary day here in the Connecticut area this morning, but I'm excited about my day to get started. Before I start my weekend, I'm getting to meet a buddy, an old friend at Jimmy John's. Who knows Jimmy John's, the sub shop? Big fan. I got turned on to Jimmy John's when I was down in the Carolinas. I remember every Sunday after my radio show, how excited I would be to go to my local Jimmy John's for the number 5, the Vito. I love the number 5 LBI with chips and a drink. Who knows? Who's a Jimmy John's person that knows what LBI means? Should we have another contest in the comments? Tell me what LBI is for Jimmy John's. Anyway, I get to number 5, the Vito, essentially Italian sub. They have great chips, fantastic bread. Can't wait. Other great spots. So I'm in the Stamford area. Other great spots for a nice Italian sub is John's Pizza at the 5 Points where the Dunkin' Donuts is. At Strawberry Hill Road, Prospect Street, Hoyt Avenue, next to the Dunkin' Donuts. Really good sub. Great bread. Again, I think the key to the Italian sub, and I'm a fan of the Italian sub, is the bread. You want a little chew on it. Semolina bread. Anyway, so that's what I'm looking forward to as I'm getting ready to finish up the week here. How about you? What's for lunch? All right, anyway, I thought I'd jump into something that's worthy of talk now. 2024. It's a sad state. We think we already have our candidates, and primary season hasn't even begun. Democrats, Joe Biden says he's going to run with Kamala. Biden's going to be the nominee, and yet polls indicate most people do not want Biden to run again. Even Democrats. Now, the polls jump around a little bit, but Democrats, 57% of Democrats don't want Biden to run again. 87% of Republicans, 70% of the general population doesn't want Biden to run again. And why? Well, primarily, he's just too old. He's struggling. He's 80. He's going to be 81. You can see him on TV. He shuffles. He can't walk properly. He gets lost. He's. Thank you, President. Thank you, Joe. Thank you for years of service. Time to move on. And so the real concern for Democrats is how do they move away from Joe Biden without being left with Kamala Harris? How to get Joe Biden to not run? We have a couple of people are already in the race. Robert Kennedy, who's making a good show of himself, hard to listen to. And he says it himself. He feels bad for people who have to listen to him. Remember, he's got some throat issues from years ago. Hard to listen to, but nonetheless, he's talking some sense. People are starting to like what they're hearing. And of course, we also have Marianne Williamson, who ran in 2020. Not much of a threat there. But if Biden were to bow out, I'm sure there are a bunch of other candidates that would jump in. And I think on the top of the list is Gavin Newsom out of California. Not a fan. Obviously, I'm a conservative guy on the right side of the political spectrum. So I'm not a fan of his politics, but impressive man. He's got the couple important things: great name recognition and very attractive. Right, good looks always help in politics for men and women. On the other side, of course, right now it looks like Trump is the GOP candidate, and that's disappointing. That's disappointing. Not a fan. If he were in the room today and asking my advice, he would yell at me and scream at me afterwards. I would tell Donald, please don't run. Thank you. Your demeanor and temperament do not match the presidency. Having said that, he did learn some good lessons in his first term that hopefully he might be able to apply in his second term, but not a fan. Wish he wasn't running. I know that's anathema to lots of Republicans, and it's okay. Support your candidate. Lots of baggage. Who knows what his legal issues will be? You know, the speculation is that Democrats are doing all they can to push Trump to the front and center, so the Republicans nominate him and they come down with a gavel and crush him in 2024 with legal proceedings and indictments and jail, and they walk right into the White House again. Trump does have some competition, thankfully. Haley, Ramaswamy, Hutchinson, Elder, Scott, DeSantis, Pence, Christie, Burgum, Suarez, Hurd. Ron DeSantis, Please stay and stop running. Just be governor of Florida. You're doing a great job down there. Stay there another 4 years, put 8 years in, then come out and run for president after that. And then we have the third party candidate, Cornel West, big concern for the Democrats. Of course, he will attract progressives, and he will take votes from the Biden administration, not from the GOP candidate. But here we are. This is what we have. We have an 81-year-old man and a 70-year-old man. And so it's really sad for us. And then watching around the world, our foes, our potential enemies, our adversaries, our competitors, what must they be thinking? I'm going to make a prediction right now. No matter who runs, whoever the Democrat candidate is versus whoever the Republican candidate is for presidency in 2024, Dems win. That's my prediction. What are we? July 14th, 2023. The Democrat candidate wins the presidency in 2024. What do you think? We have some real challenges on the fiscal side as well. We need some serious candidates to jump into this race who have a vision for restoring fiscal sanity at the federal level. $33 trillion in debt, $1.35 trillion annual deficit for fiscal year 2023. Real trouble on the fiscal side. All right, that's my little rundown. Let's go ahead and take a curve on over to the financial markets, check on the economy, how markets are reacting. I was with you last on Wednesday talking about the CPI. Today's Friday, so we'll check in on Thursday. Initial unemployment claims data came out Thursday morning, 8:30, as it does every week. 237,000 Americans filed for initial unemployment claims. Still a great number, well below expectations. Stuck at these really low levels in the 200s. This is 1960s, 1970s levels. Really now, 2022, 2023 levels. Something is amiss between the claims data, non-farm payroll data, and within non-farm payrolls between the establishment survey and the household survey. The economists are starting to pick at this data and speculate there might be some manipulation going on a la China. Nonetheless, these labor market indicators reveal a tight labor market still, even though lots of part-time workers, lots of full-time workers are classified as full-time because they have several part-time jobs. But something is askew. And here we have an economy moving towards recession as a result of Fed rate hikes, and the initial unemployment claims are still at 237. Doesn't make sense. Good news for workers, of course. Also on Thursday, we had the PPI, the Producer Price Index for June, up 0.1% versus 0.2% expected. Great news. Great news. Thank you very much, PPI. Inflationary pressures are abating. That's what we really need to be sure. We saw on the consumer side the other day, and of course we see it on the producer side. This is where it starts, right? The producer side. Now remember, prices are quick to go up. Prices are sticky downward. So as much as the price level has risen quickly since January of 2021, do not expect it to fall back as quickly. When we exclude food and energy from the PPI, remember food and energy, very volatile series driven by speculation on international financial markets, ex-food and energy up 0.1, and year over year, PPI up 0.1. And again, ex-food and energy a little bit higher, 2.6%. So you see good moves on energy and food prices to the downside over the past year. But a 2.6 on a year-over-year basis is still a little elevated, not quite where the Fed wants to be, but good news for sure. And of course, markets loved this yesterday, especially the equity markets. The equity markets are so dependent on the Fed. The Fed has put in such a bid for equities over the past 15 years. It's almost criminal. The Fed's dual mandate is to maintain stable prices and full employment, but it appears they've taken on a third mandate over the past 10 years, and that is keep stock prices high. Anyway, markets loved it. Stocks rallied, bonds rallied, dollar sold off, commodities rallied. Happy days are here again in the USA. The obvious economic challenges presented to the U.S. economy do not matter to stock market participants anymore. But something is disconnected here. Do not put new money to work up here. That's my recommendation to you. All right, let's check in on today for Friday. University of Michigan consumer sentiment will be out. You may have, depending on when you listen to this or watch this, it will be out at 10 o'clock. 65.5 is what we're looking for. Let's take a look at the markets for a second, a little snapshot. Remember, I told you markets have reacted very positively to the CPI and PPI data out this week, both showing inflationary pressures weakening, possibly causing the Fed to pause after they hike rates here in July. S&P 500, 4,510. new yearly high, only 200 points off the all-time high. Watch 46.83 above and 43.98 below. Again, I urge you, don't put new money to work up here. U.S. 10-year Treasury, the benchmark, 3.768% is the yield on the 10-year, well below 4% now. That's that lack of inflationary pressures, right? Buy bonds. Remember, bond prices and interest rates are inversely related. Bond prices rise, interest rates fall. Bond prices fall, interest rates rise. Watch 3.7% below and 3.87% above. NYMEX WTI crude oil, 76.92. Kind of stuck in a little range here the past few days. Watch 80.83 above and 72.90 below. US dollar index on the foreign exchange markets, 99.82. Dollar continues to sell off in the face of rising interest rates around the world. The interest rate differential between the US and other countries narrowing, so interest rates drive currency rates. Watch 98.81 below and 104.04 above. Let's just last check on gold, 1,963.70. Gold's been stuck here below 2,000, a little narrow range. Remember, gold is an inflation hedge. As inflation improves, gold should sell off a bit. Watch 1932 below and 2,000 above. All right, and lastly, I got a little topic for us, ChatGPT. I want to know where my money is. Where's my money, ChatGPT? Got a lot of attention now, AI, these language models. And ChatGPT, it's a natural language processing tool driven by artificial intelligence that allows human-like conversations, almost like a chatbot. It can answer questions, assist you in tasks, compose emails, write essays, scary for schools, encode languages. You can create an app, build a resume, write Excel formulas, summarize content, write a cover letter. But that write an essay thing is a problem for high schools and colleges. It was created by OpenAI, an AI research company, launched in November 30, 2022. Call me a Luddite, make fun of me, I don't care. I'm not using these tools. I think it's cheating. And more importantly, I want to know where my money is. How about you? Do you want your money? ChatGPT scours the internet for vast amounts of information, including websites, books, news articles, and more, and takes this information and creates sentences and paragraphs and essays out of it. That information is information that you and I, all of us in the world that put information on the internet, that's our stuff. Our conversations, our essays, our writings, our comments. They are using our stuff to make money. So I want to check. I want a residual check. Everyone in America, everyone in the world should get a residual. If you put content on the internet, you should get a check. I've written lots of articles, lots of podcasts, lots of audio. You want to steal my thoughts? I want some cash. All right, gang, that's it for today. It's Friday. Enjoy the weekend. Summertime in the Northeast. What a wonderful place to be. Always try to buy American.